Hello, WealthLab 8 users. Glitch here. Welcome to another episode of WealthLab Strategy Trading, where we take a look at a meta strategy, which is a strategy composed of other strategies all working in combination that I have been trading over the past several years and kind of see how it's doing in current market conditions. So, yesterday was the big relief rally from the effect of the president pausing implementation of some tariffs. So we saw this massive relief rally after basically entering a bear market on that new tariff news. So how did our meta strategy cope with the relief rally? Let's take a look. Let's open our meta strategy here, and we typically run it over the past 3 years, and we'll do that again here, but I'm going to run it on a longer time scale in a little bit so we can see like a bigger picture of how it's behaved. But let's just run this over the last 3 years like we typically do. So here we go. Let's take a look at, we've been looking at the drawdown tab. So yeah, let's take a look at our current drawdown here. So this is drawdown in percent. So let's kind of zoom in. We have this huge decline of the new bear market. You see the white line is the benchmark SPY, like just hitting about almost the 20% drawdown there, about 19. But our meta strategy actually peaked at a 15% drawdown, and it's now snapped back with the relief rally. It snapped back to 4.6, and after today's sell-off or kind of retracement of that move, we're at about a 7.4% drawdown still. So that is compared to the benchmark, which is currently at a 14% drawdown. So our meta strategy is so far handling this whole crisis better than SPY. So, I mean, I think that's positive. Let's take a look at the equity curve. Here we can see kind of what happened recently. You know, we actually started this series like right around here. So we saw like a little bit of this surge at the all-time high, and then we entered this massive drawdown phase. Here was the relief rally, and here we are currently. So if I move the mouse here, we see a good piece of news here. We're only at 30% exposure right now. So what happened during this bar of the relief rally, this big surge, our meta strategy wound up selling a bunch of positions. It uses limit orders on a lot of exits. So finally, all of these limit order positions got sold. And then the following day at market open, it wound up selling a bunch of the market order positions. So let's take a look at our current open positions. So we currently do have some open positions. We basically have a lot of these smaller TXXX positions open still. So those will stay open until the underlying stock has 2 consecutive updates. So that's what our main exposure is consisting of now, our 30% exposure. Plus, you'll notice here, the strategy we're going to talk about today, we are open the symbol SVXY. Let's double click this. This is the short VIX, short-term futures ETF. So this ETF is an inverse of VIX. So when VIX is spiking up to new highs, this ETF is going down. And when it goes down into an oversold condition, that's when this VIX Cooldown Strategy goes in for a position and buys it. So the thinking is VIX will spike typically at very high levels and then won't stay at that elevated state for too long. These spikes, typically resolve down relatively quickly. So the thinking is we get in on the spike when volatility is high and this inverse fund is low. And then when volatility gets back to a normal range, this inverse ETF creeps back up. So let's actually open up the VIX Cooldown Strategy on its own strategy window here. And let's run it on SVXY, all data, 100% of equity. So here we go. We see it has a 11% annualized return. It has a win rate of 82%. So it's typically the thesis seems to be working for this one. Buy this inverse ETF when VIX is spiking. Let's take a look at the equity curve. You will notice, let me remove the benchmark here. So you notice all of these good trades, like basically, I mean, there's a couple losers, but a lot of good trades in a row, and then this one bad one. So this one kind of took the strategy down a peg, and then it had to kind of creep back up. Here was another kind of smaller loss. And let's take a look at the position we're currently in. So we did get a good spike, but then the recent decline brought this inverse ETF down a little bit. So we're going to hold it until we get the exit signal. Let's see if this one turns out to be a winner. Let's take a look at the chart. So here is our entry, and we're just about flat on this one for now. If we scroll back and take a look at some of the more recent entries here, we had one in December of 2024. That was the last entry. Turned out to be a 4% winner. And the previous one here was our roughly 12% loss. Notice how this one was kind of mistimed. VIX apparently shot sky high, here in August. But we didn't sell, we didn't panic sell here. We waited until things did cool down, and we wound up at 12% loss, which was much less of a loss than we would have had if we would have panicked here. So kind of this goes in with the thesis of panic selling is typically not the right thing to do. I mean, if I would have panic sold like out of a lot of these positions in the meta strategy, I would have basically avoided this relief rally, which naturally closed out a lot of the positions. So it would have been a much worse case for me if I had panic sold and thought, well, like some people are talking on the forum now, when market conditions are not normal, do you step aside and stop trading the strategy? I mean, I don't. I keep trading it. And let's actually go back to the strategy, speaking of that, and let's run it for a longer time frame. So let's run it from the year 2000 onward. I think I was going to say 2010 because that's when TQQQ started. A lot of the strategies trade TQQQ, but let's get the dot-com bubble burst and the financial crisis in there as well. So yeah, let's run it from 2000 onward and take a look at some of the worst cases that the market experienced and how my meta strategy handled those cases. So over the full history here since 2000, our meta strategy has a 20% annualized return compared to 7% for the benchmark. So that's good to see there. Let's take a look at our equity curve. Do we want to look at the equity curve? I think we'll look at the drawdown curve. Yeah, that's what we want to look at here. We see the massive drawdown during the dot-com bubble burst, the other massive drawdown in SPY during the financial crisis, whereas the meta strategy, kind of maxed out at a 20% drawdown in both of those cases. So handled it much better. Currently, yeah, we can zoom back into the current state. So yeah, here we're, back up to like about a 7% drawdown, while SPY is still at a 14% drawdown. So it's good to look at the big picture to, get more confidence in strategy trading. Another one I like to look at, or I just, kind of rediscovered, is the rolling profit. So this is the 12-month rolling profit over the whole period. And so basically this graph is showing at this point in time what your 12-month profit would be on that particular date. So yeah, you could see the benchmark, going into, like the basically 35% loss on an annual basis, and in the financial crisis, like even 45%. Whereas the meta strategy, which is the blue line, has its, slight dips into the negative on the 12-month return. I mean, the longest one was here during the financial crisis. So this was the worst case for the meta strategy. I mean, we had to wait basically from late 2008 to mid 2009 before we started seeing 12-month annual returns get back into the consistently positive territory. But compare that to buy and hold, which I think is a very positive sign for strategy trading in general. So today I'm going to put this VIX Cooldown Strategy on the Patreon, and I like it because it uses a different instrument. It's using of inverse VIX. So I want to try to get more strategies in the meta strategy that kind of use alternative investments like that. I mean, I think it's too much kind of focus now on TQQQ and NASDAQ. I want to try to diversify it more going forward. So any ideas along those lines, leave them in the comments below or leave them on the Patreon. Let's see if we can get some other, nice hedges like into this thing to cope with unexpected market events and to capitalize on different investment vehicles. But that's it for today, everyone. Thanks for watching, and see you all on the forums.